Couple of very interesting trading days. As you guys know, the U.S. presidential election will be taking place on November 8th, Tuesday, and there's been a lot of volatility in the markets. As you guys know, the S&P 500 had an unprecedented run, ending in the red for 9 consecutive days. Haven't seen that since 1980, so about 36 years ago. As well as a lot of market fears. The volatility index peaking at a 9 to 10 year high, actually rising 20% over the last 1 or 2 weeks. So a lot of uncertainty in the markets, which have been essentially producing a little bit of a sell off over the last 9 days. Like I said, the S&P 500 ending in the red 9 consecutive days. So having said all of that, what I wanted to do today was talk a little bit about a strategy for potentially identifying some value bets. And I say bets because it's kind of a market timing strategy. The market's been in the red 9 consecutive days, really prompted by uncertainty from the U.S. presidential election. I think Hillary Clinton will be elected from all the polls I'm seeing. And I think if that happens, the market's going to quiet down. I think some of the stocks that have been hit pretty hard are going to recover somewhat. So I think we're going to have a little bit better market trading conditions with regards to volatility and uncertainty in the market. Again, how can we identify some of these value bets? Well, I came across this strategy. I think it came to be popular in the early 1990s, this idea of investing in dogs of the Dow. So essentially, it takes a look at the Dow 30, S&P 500, large cap blue chip companies. It takes a look at which companies have the highest dividend fraction, with the idea that a lot of these companies are very large blue chip companies, and they don't really alter their dividends so much with regards to trading conditions. So if the stock price goes down a bit, they don't alter their dividends, which essentially means that those companies that maybe at the bottom of the business cycle, that may be cheap relative to their overall value, are going to have the highest dividend yield. So by selecting those Dow 30 companies with the highest dividend yields, you're going to be having companies with the largest upside moving forward. That is, companies that may be undervalued. So having said all that, let's kind of go through some companies. There's 10 companies that are essentially identified as dogs of the Dow, and of those 10, 5 of those are sort of selected as small dogs, those companies that have the lowest stock price. And the whole idea behind that, again, is that these Dow of the dog stocks have really, looking in a retrospective fashion over the last 80 years or so, back to the 1920s, have outperformed the Dow Jones Industrial Average. And the small dogs, again, those dividend dogs that have the lowest stock price, have not only done that, but they've also outperformed the S&P 500. So again, this is a strategy of possibly identifying value bets within the market. So having said all that, I own 7 out of these 10, and I think I'm going to be putting a little bit more capital into these, adding to my positions. So let's kind of take a look at my stocks here. So going down through my portfolio here, first of all, Pfizer is one of the higher end dividend dogs. I think it's actually on the list number 3. So as you guys know, this stock's been hit pretty hard over the last 3 months or so. You can see it's down 14% over the last year, down 9%. Its dividend yield is 4% now. So great dividend yield, good PE ratio. Again, large cap company. This is a potential stock that has a good upside potential to it. The second stock I have on the dogs of the Dow list is GE here. This is at the bottom of the list. Dividend yield is okay, 3.2%. But again, this is a company that's also been hit hard pretty much for the last 3 months or so. Over the last year, it's been holding steady. Over the last 5 years, it's got great growth. So again, this is a value bet here, a company that has large upside potential. And both Pfizer and GE are small dogs as well. Third stock here, going through my list, is McDonald's Corporation. Great dividend yield here, 3.2%. Good market cap and PE ratio. This is not one of the small dogs. Next stock would be Coca-Cola here. This is a small dog. Again, a large cap blue chip company that has good value. It's been hit pretty hard over the last few months or so. This is down 3.38%. Over the last year, it's been holding steady. Over the last 5 years, got an okay performance. Hasn't really met the Dow Jones Industrial Average performance, but again, these are companies, large cap companies that maybe at the bottom of their business cycle, maybe good value bets with really good upside potential on them. Verizon is another one here. Again, it's been hit hard. So the common variable with all these stocks is that they've been essentially downtrending over the last few months, but they've had good upside potential. And again, they're part of the Dow 30 index, which means they're large cap, blue chip companies that have performed well over the long term. I think actually I missed one here. IBM is also one of the dividend stocks contained within the dogs of the Dow. Again, a stock that's not performed well over the last 3 months or a year, but over the last 5 years. Actually, this stock over the last 5 years has not performed that well. Down 7.3%. And the last stock I own is ExxonMobil. Again, large cap blue chip company that may be at the bottom of its business cycle, but has large upside potential. Again, you can see that common variable here. Over the last 1 month and 3 months, it's been down, but over the last year and 1 year and 5 years, it's been up. And apart from those, the other stocks on there are Chevron, Caterpillar, and Cisco. Those are all part of the dogs of the Dow as well. So yeah, 10 stocks, 7 of them that I own that potentially have good upside potential in this market. You know, stocks that are large cap companies, large market capitalization companies over 5 billion, blue chip companies that have had a very long, solid track record of good performance that, based on their dividend yields, may be somewhat undervalued or at their lower priced end that have good upside potential. So yeah, just kind of wanted to talk about one of the strategies I'm potentially looking at for Monday. The stocks do trend down. I think I am going to be investing some of my outstanding capital into, like I said, some of these stocks that I think may be good value bets, may be stocks that have good upside potential to them. And like I said, 7 out of those 10 I already own, so I'd simply be adding to those positions. And I may jump in, grab some Chevron, some Caterpillar, and some Cisco. A little bit undecided about that currently, but yeah, those are some stocks that I'm going to be taking a look at anyway, of jumping in. If you guys have any other stocks potentially that would be good picks, let me know. Like I said, on Monday, if the indices do continue to trend down before the election on Tuesday, I think I'm going to jump in, buy some stocks with the whole idea that the S&P 500 and actually all 3 major indices should recover. The market in general should recover after Hillary Clinton is elected president. I think that's going to be what's happening based on the polls I'm reading. But again, it's really hard to prognosticate. There could be an upset win by Trump, but from the reading I've been doing, and I actually was doing a little bit of reading on the BBC, and there really hasn't been an upset in the presidential election since 1920. All those candidates that were leading in the composite kind of overall polling have won the election. Yeah, there's a few polls out there that kind of vary from the overall consensus, but for the most part, the candidate who was leading the polls coming into the election wins the election. So I think that's going to be happening. That current leader is Hillary Clinton. So the Clinton win, I think the markets will recover. These value stocks here, at least based on the dividend or the dogs of the Dow kind of dividend, high dividend yield strategy, may play out. So let me know what you guys are doing on Monday. That's my strategy for Monday. I'm going to be jumping into some of these dogs of the Dow, putting down a little bit more capital in positions I already own. And if I can find a Cisco or Caterpillar or Chevron that's cheap, I might do that as well. But really just putting some more capital into the dogs of the Dow that I already own. So with that, I'm kind of end the video here. As always, if you like my videos, go ahead and subscribe, like and share if you feel so inclined. And again, let me know what you guys are doing with your portfolios on Monday. Like I said, I'm going to be putting some capital in if the market continues to trend down, and I might do some